Ryan, I hear what you're saying about history, but if we can pull up a year-to-date chart of the S&P 500, if you show people this, I mean, it doesn't look like October is the worst month because it's hard to tell exactly where October is on that. And I would be shocked. I've been shocked before, but I would be shocked if November is the best month of this year when we've seen this kind of gains. This is different, isn't it?
Well, great point there. I mean, this is like the best election year ever going into the election, right? I think 1980 was better by the end of the year, but this year isn't over. But I want to talk about the VIX for a second here, because great point. Everybody knows there's going to be volatility next week, or at least you assume there will be. So the VIX has obviously been higher, even though we've been kind of calm. I know we had the big drop yesterday, but for the most part, the last 30 trading days have been really calm. Once you get through the election, all those kind of put buyers and all the VIX calls that we've been seeing, John, those could unwind, right? Those people have to kind of unwind those. And again, that's why we think this upward bias is still alive. And I'm with you. We want
Nvidia has undoubtedly benefited most from recent developments in artificial intelligence, AI. According to market researcher IoT Analytics, the company's graphics processing units, GPUs, swiftly established itself as the industry standard for generative AI, accounting for an astounding 92% of the data center GPU market. 5 quarters in a row have seen triple-digit year-over-year growth in sales and profits because to Nvidia's supremacy. Numerous rivals have attempted, but failed, to match the company's unrelenting rate of invention. Nvidia changed its product release schedule from every 2 years to every year just this year, making it much more difficult for competitors to compete. For Nvidia, the last few quarters have already been quite prosperous. Thanks to its expertise in the technology that clients require to support AI projects, the company has established an artificial intelligence, AI, empire. Customers are swarming to Nvidia for its AI chips or graphics processing units, GPUs, which are the quickest available, even if they must wait because supply cannot keep up with demand. Over the previous 5 years, all of this has led to stock price increases of 2,600% and triple-digit earnings growth every quarter. This year, momentum hasn't halted, and the stock is expected to rise by 185%. I don't think this is a slowdown, even if Nvidia expects double-digit revenue growth in the third quarter. In fact, I believe that Nvidia will have a very successful fourth quarter. Let's investigate. First, a brief synopsis of the Nvidia narrative thus far. With 87% of its entire income coming from sales to AI customers, the company's dominance in the market has made it practically synonymous with AI. However, this wasn't always true. Initially, Nvidia's GPUs were primarily used in the video game industry. However, it quickly became apparent that these chips, which can do several jobs at once, could be useful in a variety of other contexts. To achieve this, Nvidia created the TUDA parallel computing platform, and over time, the business expanded into other markets. Additionally, Nvidia's GPU discovered its next significant growth engine when the AI revolution took root. In order to become the one-stop shop for any AI project, Nvidia broadened its AI offerings beyond only the GPU and now offers a variety of goods and services. In a recent interview on the podcast BG2 Pod, CEO Jensen Huang described Nvidia as the on-ramp to the AI future. And the startup does have all of the big players in the AI market on board, including Amazon and Meta Platforms as clients. To stay informed about the latest developments from Nvidia and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on Nvidia stock, so please share your opinions in the comments below. Now let's dive into today's video.
First and foremost, let's just zero in on the amount that they're investing within artificial intelligence. Is this for what the street is anticipating and how aggressive they are going to continue to be in spending? Is this kind of something that is a good marker? Is this something that you hope they begin to taper off sooner rather than later?
Yeah, I don't think folks expect spend to taper off. This is an environment. If you look back in history, companies who maybe didn't spend ended up losing down the road. by not being prepared for kind of the coming technology. So I think when you kind of hear commentary from Google, Meta, Microsoft, Amazon, spend is going to keep coming here. AI is this massive, massive opportunity. We're only a year or so into the opportunity. So we're probably looking at a very long runway of spend. I think investors are really just trying to get their arms around what should that level be. You know, for Amazon, they guided $75 billion in capital expenditure this year. The only color they gave us for next year was they'd likely spend more. You know, in conversations with investors, we're hearing people are already kind of earmarking 90 billion plus. That's 20% year over year on capital expenditure. So it's a huge opportunity. Most companies are not capital constrained, they're capacity constrained, really with chips being the choke point. So given how big the opportunity is, we're probably going to see a lot of spend here for the next several years. That said, Amazon delivered really good operating income margins. That appears to be the key indicator for the stock now. And it's really interesting because over the last couple of quarters, it was really AWS growth. Now it's coming down to, hey, we're ready to give you guys growth with expanding margins. And that's what they've been delivering.
And that was a nice surprise here for the street. Going back to that spend real quick, it sounds like you're comfortable with those levels, Nick.
Yeah, Amazon's a dominant cloud player. They're going to want to be dominant in AI. They need to keep spending. I'm very comfortable with their spend. I prefer that they spend versus kind of getting behind the 8 ball down the road and not having the capacity or the chips to provide their customers what they want from an AI perspective. So I think it, this is a little inflammatory, but it's kind of spend or die kind of environment where if you let your competitors get ahead, you will be behind in the future.
Yeah, well, we heard Jassy call it a once-in-a-lifetime type of opportunity. Nick, what does that longer-term potential then look like here for Amazon?
It's just massive. You know, when we look at IT spend, I mean, so much is still on-premise. That's going to move off-premise to the cloud, from internally managed servers to the cloud. He said about 10% has shifted, and he thinks that ratio will switch to where 90% will be shifted and 10% will be on-prem. We verified that with kind of our analysis, and we think that's right. There is just a multi-decade runway here for everything shifting to the cloud, from the media we consume to the processes we do at work to where we store our files across the board. So we agree. It's a massive, massive opportunity that deserves kind of the spend it's getting.
In fact, Larry Ellison, a co-founder of Oracle, claimed that he and Elon Musk, the CEO of Tesla, recently took Huang out to dinner and begged for additional GPUs. Nvidia's strong position in the AI sector, which is expected to grow from $200 billion to $1 trillion by the end of the decade, is evident from the company's recent earnings and share performance explosion. Let's return to my guest now. Why will the fourth quarter be so significant for Nvidia, despite the company's third quarter growth projection being slower? Although it's unclear yet, sales growth in the fourth quarter should not be regarded as poor performance, even if it does reach the double-digit range. Since sales has already risen to extraordinarily high levels, Nvidia's comparison periods have become difficult, making continuous triple-digit growth all but impossible. The introduction of Nvidia's eagerly anticipated new architecture, Blackwell, and its most potent chip to date should make the fourth quarter particularly noteworthy for the company. During the quarter, Nvidia intends to increase production and generate billions of dollars in revenue. Thus, Blackwell's first quarter of revenue will be the fourth quarter. According to Nvidia, demand for Blackwell has outpaced supply and is expected to do so again in the upcoming year, demonstrating how eager buyers are to get this new product from the firm. Nvidia's stock is now priced at 49 times forward earnings projections due to its recent surge. Even while it's not extremely inexpensive, this is still fair for an AI leader at this point in its development. With the Blackwell launch approaching and a commitment to yearly innovation, Nvidia has plenty of potential to grow. In my opinion, the fourth quarter will be a significant one for Nvidia and could even spark this next round of growth. So, what implications does this have for Nvidia's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication. So if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on Nvidia stock in the comments. Your support truly helps us grow. Now let's get back to the video.
Well, I think for the hyperscalers, we learned that the cloud business, the pie is getting bigger. So, right, so, I mean, Google definitely doing a great job. They're finally profitable. So, I was skeptical of Google, definitely wrong about that. They're growing. AWS is growing, Azure's growing. They're growing at different rates. So that overall pie is growing. I think what we also learned, I loved what Satya Nadella said. He said, we obviously have data center constraints, but hardware is not keeping up with demand. And so to me, to really echo what Steve said, I think this whole AI narrative, the data centers, really plays into the Dells, the Nvidias, the Vertivs. You can have that whole ecosystem. I still feel like it's going to be a multi-year spend here from what all of them said this week.
Josh, right? I mean, if anything, maybe if nothing else, we just underscored this. It's not like these stocks more recently had been trading like a monolith anymore anyway. But maybe this is the week that puts the exclamation point on the fact that you're going to have these stocks diverging from one another in the months ahead, because their businesses are different, their investments towards certain things are different. Most importantly, their return on the way they're investing is different, and we learned that, I think, this week.
One artificial intelligence, AI, company that you most likely wish you had purchased at its IPO is Nvidia. On January 22, 1999, the chipmaker made its debut at a mere $12 per share, when Nvidia introduced the first graphics processing unit, GPU. It rocked the computer world and revolutionized multimedia and gaming. You could have made incredible profits over the past 5 years, even if you missed the opportunity to purchase Nvidia when its stock was trading in the double digits. Due to the surge in demand for its AI chips, shares have increased by more than 2,700%. With a market valuation of more than $3 trillion, Nvidia is currently among the most valuable firms in the world. Nevertheless, it should come as no surprise that Nvidia has divided its shares 6 times since its first public offering. Your shares would have greatly increased in value and be worth a good amount of money now if you had purchased just one share 25 years ago and kept it. Nvidia's 10-for-1 stock split in June probably helped you if you bought it earlier this year and waited. Because of this split, you now own 10 shares for every one you previously had. However, past splits could give you even more shares if you purchased Nvidia even earlier. To help you figure out how many shares you might have now depending on when you first invested, here is a brief overview of Nvidia's stock split history. After 6 stock splits, a single share of Nvidia that you purchased during the company's January 1999 initial public offering, IPO, would now be worth 480 shares. That implies that, excluding dividends, your shares would be worth about $67,000 on October 30. As always, sharing your thoughts and insights in the comments section can foster a more informed community discussion, helping everyone navigate the complexities of investing in this dynamic sector.